All right, good morning. This is Steve Gronlund. We're going to get started here. And just real quickly, if somebody could raise their hand on the control panel, let me know that you guys can hear me out there. If somebody will just raise their hand, there's a little hand button there in your control panel. If you'll just raise your hand, let me know that you are receiving me today. Anyone, raise your hand. Okay, thank you, Robert. Appreciate it. All right, now I'm going to get started. This is Steve Gronlund. I'm a certified mortgage planner. I've been in the business for 20 years, and I have had the opportunity to get to know this product and this company over the last 6 or so months. And I'm going to be sharing the concept today, introducing FARJHO, which stands for Flexible and Reversible Joint Home Ownership. During the presentation, you are welcome to write your comments or questions in the question box down below on your control panel. And I will get to those questions at the end of the webinar. The first portion of this webinar is designed to be able to share the basic concept of FARJHO and actually go into some more of the details near the end. And then I will open it up for questions. This webinar will continue throughout the end of the year, and then it will abruptly stop because we will have plenty of recorded webinars that we will be able to choose from to put on the website, so you can have instant access to these webinars whenever you choose. You can also send links to people to be able to understand this concept a little bit more in detail. This is not a long webinar. It normally goes about 40 minutes, and then we open up for questions and answers, but it's also not going to be boring. You're going to definitely get a lot of information, and many of you will get very excited about what you hear today. Anyway, so let's get started. I like to get started going back to the beginning, because it's really important to understand how this concept got started and who started it and why. So going back, first of all, I'm a certified mortgage planner, and I've been doing seminars in Southern California to 3 boards for Riverside, Corona, Murrieta, and Vista for many years. And for the last 3 years, I've been doing a seminar on alternative purchase options, where I teach realtors and real estate agents how to sell properties to people who have the capacity to buy a home, want to buy a home, have the down payment to buy a home, but for whatever reason cannot qualify for a mortgage in today's very difficult mortgage industry. In fact, I believe less than 15% of people today who have a down payment, have a desire to buy a home, and have the capacity to make a payment can actually qualify for a mortgage in today's mortgage industry. So that's pretty bad, folks. And unfortunately, all the real estate agents are chasing those 15% of people, one or 2 out of 10 people. The other people are actually finding homes and buying homes through realtors who really know and understand these concepts. Nevertheless, when I first met Ralph, it was after one of these seminars, and he came up to me and he talked to me about his concept, and I became very interested in learning more about it. He created a brand new alternative purchase option. Now, I went to lunch with Ralph, and I'll be honest with you, the first time that I met Ralph at lunch and talked to him about this concept, I really didn't understand very much of it, to be totally honest with you. It was much more than I could understand. Ralph is a financial engineer, and he has a very, very intriguing background. And to understand his background, he's actually built and created financial products to solve problems for major banking industries, banks, financial institutions, as well as, believe it or not, countries. So let's go in a little bit about Ralph's background. If I can turn off this iTunes. Keeps coming up. Ralph's background is, first of all, he's a native of Taiwan. He's not Chinese. He's a native of Taiwan. Taiwan's been an ally of the United States for 50, 60, 70, 80 years. He's a U.S. citizen, educated in the United States, MBA in finance at the Wharton School, University of Pennsylvania, doctoral study, a PhD candidate, Master's of Chemical Engineering, Rice University, and a BSc at National Taiwan University, Taipei, Taiwan. Just a little information about Ralph. He started his career at Morgan Stanley as an investment representative, moved on to Chemical Banking Corporation in New York City as a currency options dealer, and AT&T Capital Corporation, another bank in New Jersey, as a senior treasury manager. He managed the daily treasury interest rate exposure with advanced hedging techniques for asset and liability management. Very important in the U.S. economy and with banks is being able to hedge their interest rates. ECMC, which is an Equitable Life Assurance Society, which is also a bank as well as a life insurance company. New York City, he started working with derivatives products as a manager, managed day-to-day derivatives trading and hedging for the insurance company's general accounts. And on the Union Bank of Switzerland, East Asia, Singapore, vice president, senior dealer, risk management, performed many first trades in the innovative structured derivatives covering Asia and Europe. He more than tripled their profitability. And then Chase Manhattan, Asia Limited, Hong Kong, managing director, structured derivatives, built and ran the entire Asian operations and structured derivatives and advanced treasury products. He introduced many derivative products to the various Asian financial markets. Then he created his own business called Advanced Risk Management Solution, or ARMS, where he was in Singapore, founder, manager, director, first financial consultancy firm in Asia, later on to become the largest as well. Had many blue chip clients around Asia, Middle East, and Europe, helped establish many futures and options exchanges, evolved into the leading financial treasury, derivatives, and financial management or risk management systems providers in the emerging markets in Asia, Middle East, and Europe. Later on then, he created a new business called Advanced eFinancial Technologies in Los Angeles, where he assisted and advised many banks and other financial institutions in developing global capital markets business in emerging markets such as Asia and the Middle East with all of his high-level contacts and relationships. He also began the process of engineering and creating the swap rent concept, which would later create the FARJHO concept as a solution for the coming predictable American financial crisis, creating a new, safer, better way to finance residential real estate using equity financing instead of debt financing. He conducted a 10-year-long political campaign where he got in the airplanes and flew all over the country and met with most of the governors of most of the states and most of the mayors of most of the larger cities in America, talking and communicating with American politicians and leaders in the position to change the way America thinks about residential property financing. Then he was invited back to China Everbright, well, not back to China, but to China, to work with China Everbright, the fifth largest bank in China, Beijing, China. He was the chief investment officer and executive vice president, managed a $50 billion investment portfolio, oversaw the global markets divisions that covered treasury, capital markets, derivatives, fund management, and investment banking, introduced long-term fixed-rate loans and home mortgages to the Chinese banking world and the consumer markets. He designed, initiated, priced, and transacted the first RMB, that's the people's money, denominated interest rate swap. This allowed the Chinese banking system to start providing fixed-rate mortgages. Very interesting here as you find out more about Ralph. He was the individual who was instrumentally involved with bringing fixed-rate mortgages to the country of China. See, China had a real difficult challenge. In 1984, they started privatizing, but nobody would buy the cheap government housing because rent was so cheap. And why would they take a mortgage from the bank that was an 18% maximum cap on an adjustable rate loan? And Chinese banks did not have the American capitalistic system of banking, and they didn't understand how to hedge or protect themselves from increasing interest rates. So this is what Ralph did, is helped bring fixed-rate mortgages to the country of China. Then he returned back to the United States in 2006 to continue preparing for the launch of FARJHO and Swap Rent with his own company, AEFT. The important thing to understand is this is not something that Ralph just dreamed up 6 months ago and he's trying to create and launch today. It's been a 10-year effort. Millions of dollars have gone into this. Worldwide patents are pending. Here's just one of the articles you might find if you do a little research on Ralph online. Just Google his name. You'll find that there's 25 years of history of articles written either about him or by him in 5 different languages. So very interesting background. So let me explain to you FARJHO, Flexible and Reversible Joint Home Ownership. I'm billing it as the very first honest and responsible free market private sector solution to today's financial crisis. Now that might be a big statement, and I understand it probably is a big statement, but the reality is if you understand this concept like I do, you will feel the same way as we go into this. Okay, so let's talk about, first of all, this presentation will show FARJHO application benefits for the American home buyers, American investors, American real estate professionals, American institutional investors like pension plans, the country of the United States. But this is only the beginning. It's really important that you understand that you need to do your own self-study to understand this concept. What I'm going to do today is just scratch the surface. There's 2 websites I'd recommend. One of them is InvestorsAlly.com. It's spelled like InvestorsAlly, but InvestorsAlly.com. And the other one, that'll give you, by the way, that will give you a high school education on these concepts. And the other one is Swap Rent, which will take you a lot longer to go through. And you can read all his blogs for years, and you'll learn, you'll get the PhD education you need on Swap Rent and FARJHO. Today I'm only going to talk about FARJHO, which is the basic of the 2 products. Over 10 years of research and investment have gone into preparation for this launch with some of the top financial minds of our time. It's safe, it's legal, it's honest, it's responsible. It takes control away from the banks, gives options to the home buyer, protects the home owner from loss completely and totally and absolutely, allows the average person to invest in real estate for the benefits of real estate without the risk, creates the first online exchange for residential real estate fractional interests available to professionals as well as retail real estate investors. Flexible and reversible joint home ownership. Let's break that down. First of all, it's flexible in that it can be adapted to almost any situation. It's reversible in that the homeowner can buy out their investors and reverse this anytime they want. And it's joint home ownership in that it's nothing more, nothing less than equity sharing. However, if you study the idea of, or concept of equity sharing, you'll find that it came from Great Britain, and it's still more prevalent there than it is here. However, the United States took the equity sharing concept and decades ago created commercial syndications, REITs, TICs, and et cetera for commercial real estate. So it's not unusual for equity sharing in the United States with commercial real estate. What is unusual is equity sharing in residential real estate. It's still more prevalent in Great Britain. It never really took off there, and it never really took off here in the United States, but it's more prevalent in Great Britain. The reason why it never took off is, number one, investors couldn't get out. They didn't have a liquid market. They had no liquidity. So this has a secondary market of investors we're talking about. And it didn't have a structure, and it didn't have a matching service. That's what's available today through this concept. So let's explain how this is going to work best for the real estate community and how I believe this is going to make a big difference in our lives. First of all, let's say we have a client, and we're going to call our client Maxwell Smart just because that's a good name. I remember the Get Smart series, and his last name is Smart. So Max has 10% for a down payment and the capacity to make a monthly payment, but for whatever reason can't qualify for a mortgage loan. Now, we know in today's market there are thousands of reasons why homeowners can't qualify for a mortgage loan. I just had to turn down a $600,000 loan just a few minutes ago because their granny flat isn't permitted. Unbelievable reasons why today people can't get loans. Maxwell might make several attempts to qualify but simply cannot. He has a down payment. He can easily make a payment, wants to buy but can't, or at least he thinks he can't. There are options, the lease option, the all-inclusive trust deed, a couple of others out there, but these are complicated, and he must find a seller who understands these concepts and is willing to sell utilizing these concepts. So often the Maxwell and other people in Maxwell's position will continue to rent because they don't have the time to stay in the hunt for the right set of circumstances. Or they just don't understand these concepts and they're skeptical, and or they don't have a realtor to teach them and to help them understand these concepts. So most people in Max's position will continue to rent, and they'll just give in and let themselves rent for years and years and years and not take advantage of this